Hello and welcome to my channel. This channel was started to prove myself that I can achieve my first $1 million true YouTube. Subscribe to the channel and let's see together if it's possible for anyone to accomplish this goal. Have you ever wondered how people grow their wealth over time seemingly without lifting a finger? Well, it's not some secret code or exclusive club, it's the fascinating world of investing. Investing is the process of putting your money to work for you, making it possible for your wealth to expand over time. It's not just for the wealthy, anyone with a bit of spare change and the right knowledge can start investing. Investing is a significant part of creating a financial safety net. It's like planting seeds today so you can enjoy the fruits tomorrow. It's the art of sowing your money in the right places, patiently waiting for it to multiply. But it's not just about patience, it requires an understanding of the market, a keen eye for opportunities, and the guts to take calculated risks. So, are you ready to dip your toes into the world of investing? Let's get started. Before you start investing, you need to understand what you're investing in. So let's dive into the details. When you purchase a stock, you're buying a piece of a company. You become a shareholder, owning a slice of the company's assets and earnings. Stocks have the potential for high returns, but they also carry higher risk. The market can be unpredictable and the value of your stocks can fluctuate dramatically. Now let's talk about bonds. When you buy a bond, you're essentially lending money to a corporation or government. In return, they promise to pay you back the face value of the bond at a certain date, called the maturity date. They'll also pay you interest periodically. Bonds are generally considered lower risk than stocks, but their returns are typically lower as well. Then, there are exchange-traded funds, or ETFs. These are investment funds that trade on stock exchanges, just like individual stocks. An ETF holds assets such as stocks, bonds, or commodities. It's designed to track the performance of a specific index, sector, commodity, or asset class. ETFs offer diversification which can help reduce risk. They're a sort of blend between stocks and mutual funds, offering the potential for higher returns than bonds, but with less risk than individual stocks. But here's the catch. With all these investments, there's no guarantee of returns. The value of your investments can go up, but it can also go down. You could lose some, or even all, of the money you invest. That's why it's crucial to consider your financial goals, risk tolerance, and investment horizon before you start investing. When it comes to investing, there's no one-size-fits-all strategy. Some people might prefer the potential for high returns with stocks, while others might prefer the relative safety of bonds. And some might prefer the diversification that ETFs offer. It all depends on your individual circumstances and goals. Remember, understanding what you're investing in is the first step to making informed decisions. The world of investing can be complex, but with a bit of knowledge and understanding, you're well on your way to navigating it successfully. Now that you understand the basics, it's time to develop your investment strategy. So, where do we start? Well, first things first, we need to set some financial goals. What are you investing for? Is it for retirement, a dream home, or your child's education? Your goals will guide your investment choices, helping you decide what types of investments suit you best. Remember, each goal comes with its own time horizon. Short-term goals may require safer investments, while long-term goals can accommodate more risk for potential higher returns. Speaking of risk, understanding your risk tolerance is crucial. Are you a risk taker willing to weather the storm for potentially higher returns? Or do you prefer playing it safe, content with steady, modest gains? Everyone's risk tolerance differs, and it's important to know where you stand. Remember, investing is not about making quick bucks, but about growing your wealth steadily over time. Now let's talk about diversification. Think of it as not putting all your eggs in one basket. By spreading your investments across different types of assets, sectors, and regions, you can reduce the risk of a single investment dragging down your entire portfolio. Diversification doesn't guarantee profits or protect against losses, but it can help smooth out the ride. Another key aspect of your strategy should be regular investing. By investing a fixed amount at regular intervals, you can take advantage of market fluctuations. This approach, known as dollar-cost averaging, can help reduce the impact of buying high. Finally, never underestimate the power of compounding. It's what happens when your earnings generate even more earnings. Over time, compounding can turn even a modest investment into a substantial sum. Developing an investment strategy may seem daunting, but with these building blocks, you're well on your way. Remember, your strategy should be flexible, adjusting as your goals, financial situation, and market conditions change. With a clear strategy in mind, you're now ready to start investing. As a beginner investor, it's easy to get overwhelmed. But don't worry, we've got some tips to help you out. First and foremost, start small. There's no rule that says you need to pour all of your savings into an investment. You can start with what you're comfortable with and gradually increase your investment over time. Secondly, make it a habit to invest regularly. Whether it's weekly, monthly, or quarterly, the important thing is consistency. This strategy, known as dollar cost averaging, can help you build your portfolio over time, regardless of market conditions. Lastly, remember to stay patient. Investing is not a sprint, it's a marathon. It's not about making a quick buck, but about growing your wealth steadily over the long term. Markets will fluctuate, but don't let short-term volatility derail your investment goals. Remember, the key to successful investing is patience and consistency. Let's quickly recap what we've learned today. We began our journey into the intriguing world of investing, where we discovered that it's not just about making quick money, but about long-term financial growth and security. We then delved into the nitty-gritty of stocks, bonds, and ETFs, explaining how they function as different investment vehicles. We emphasized the importance of understanding what you're investing in, because knowledge truly is power when it comes to your money. We then moved on to developing your personal investment strategy, underscoring the idea that it is not a one-size-fits-all process, but rather a tailored approach based on your individual financial goals and risk tolerance. Lastly, we shared some indispensable tips for beginners, reminding you that it's okay to start small and that patience is key in this journey. And that's it. Remember, investing is a journey, not a destination. So take your time, keep learning, and start building your wealth today.